So good afternoon once again. Welcome to Sage Business Cloud Accounting, and today we'll be looking at the customer module. The customer module for Sage Business Cloud Accounting. All right. For the customer module, you have these different main menus. You have add the customer list. You have transactions. You have reports. You have special time tracking, and this is a new module that has just been a new menu that has just been added to the customer module. This is called Debtor Manager. Okay, it was just added about a few weeks ago. Right, if that is the case, now how do you create a customer? And like your customers are those you sell your items to, you sell your goods, provide your services to. Okay. To create a new customer in Sage Business Cloud Accounting, you go to Customers and you click on Add a Customer. You click on Add a Customer. And once you add a customer, you can input the customer name here. Sorry, I forgot of this. All right. So as I was saying, you add a customer. You put in the customer name. Who is the customer? Let's say the customer is Shell Nigeria. What category is your customer falls into? That is if you categorize your clients or your customers. And in this case, Shell Nigeria will be oil and gas. All right. You're opening today. They have a customer VAT number. So let's say their TIN number is 192-001. All right, that's TIN number. Who is the sales rep? Let's pick this guy. Okay. Now, what is their postal address? Shell Camp. Local government Port Harcourt. Okay. Delivery address can be the same as the postal address. All right. Who is our contact person? Mr. Jeff Bezos. His email is jeff.bezos@shell.com. His telephone number is 08056111225. Statement distribution by email, yes. Let me put a functional email here. Okay, I'll put careers at eliteassociates.com as the functional email. All right, if that is the case, do you have an existing agreed discount for this customer? So if no is the answer, you leave it at 0. Then the currency for this customer, you have in a situation where you are using a multi-currency, then you have to select the currency. In this case, we are picking the Naira. Right. Once that is done, you can go to other. Yeah, you don't really need most of this. This will not be active until there are transactions for this customer. So once this has been done, you can either save or click on save and new. All right, in this case, we are clicking on save because we're already creating this single customer. Once that customer has been created, you can always have a list. You remember, you have list under your customer module, which includes your list of customers, list of sales reps, and list of customer categories. Okay, you see list of customers. That is where the page we currently are. Then you have a list of sales reps. And take note, on each of the list page, you can always add sales reps here. In the case of customers, you can always add customers. You can add a customer, and at the same time, if you have bulk customers, a lot of customers to add, you can as well import customers from Excel sheet. And once you can note the different columns where you have the name, category, you have the customer balance, you have the contact name, telephone number, the mobile, active. You can as well adjust what you are seeing to your what you prefer to see on the customer, the list of customers. And take note, under the action column, you have your action button where you have a drop down arrow. Under the drop down arrow, you have your action button for your next line of action. To either edit this customer, delete the customer, you add invoice, add quote, add sales order, add receipt. Now, for organizations that are in that sell physical products and services, it will always be good for them to use sales order. Now, the essence of using a sales order is that in a situation where the prices have not been agreed, you can always use a sales order and convert that sales order to invoice when the prices have finally been agreed. So your transaction starts from your sales order. And so once you click on the sales order and take notes, apart from the fact that you can access your sales order from the customer list, from the action button of the customer list, you can also access your sales order input page via customers, transactions, and you have sales orders. All right. So you have the customer ref here. You have all the necessary information. You can select your item. What are you selling? You're selling this item. Okay. How many? What's the quantity? The quantity is say 50. Okay. What other item are you selling? Selling this. Selling 20 of this. Okay. So either save and new, print preview, or email, which means that from this page, you can email your sales order to your customers. You can email a sales order to your customers. And with this, you can provide your customers with your prices, your product prices, such as that. And so whenever your customers come in, to get their products, you can always convert this into an invoice. Take note, your sales order will not affect the financials. And also, I want you to pay attention to the sales rep. If sales reps are attached to customers, and it's always good to include sales reps here. All right. And also the issue of inclusive pricing and exclusive pricing. You can see this checkbox here. Use inclusive amount. When you use inclusive amount, the implication that whatever price you are quoting here is inclusive of a T, and so means that whatever price you have included, VAT is inclusive. Now, if you uncheck this, you realize that it becomes exclusive pricing. All right. And from there, you can either save or save and new. Like I mentioned earlier, your sales order can be converted to an invoice. So you can convert this and create an invoice from this sales order. All right, your sales order is now being changed to an invoice. Now take note that you can see from here, from sales order, the sales order number has been included. I'm changing this to a simple layout. You can see the name of the sales rep is included. All right, in this case, the customers could have said, okay, we are reducing this or increasing it to 80, and we are reducing this to 10. All right, so if that is the case, you can always adjust, and now you are creating an invoice. That is your customer invoice, and that is how you can convert your customer sales order to your customer invoice. Okay, if that is the case, when payments are made, you can always come back here and click on create receipt. And when receipts are being created, you must always remember to attach your payments to a particular invoice. Now, for example, this payment is attached already to the particular invoice. And so when there is a tie between your sales order, your invoice, and your receipt, it's easy for you to trace your transactions. And with this, you can click on process. Once that is done, it completes that transaction. And if you go back to your customer list, you'll see that your customer status will have changed to partially still active, and that particular invoice will have changed from unpaid to paid. All right. You can as well create recurring invoices. You can create recurring invoices. And what are recurring invoices? And these are invoices that come out that are created as a result of recurring transactions. For example, if you are on a retainership with a client or with a customer, and you need to always create or generate your invoices probably on a monthly basis, and at the same time, if your figures are fixed, that you don't need to always modify your figures, you can always click on recurring invoice. Select the customer. All right, let's say the customer is ABC Transport, who is the sales rep. The sales rep is Lekon Gunaike. All right, now the recurring invoice startup. So today is 23rd of May. So if the first invoice is going to be today, what's the frequency of the invoice? Do you want to be doing the invoice, prepare the invoice on monthly basis, and the third month, which is quarter? So let's say this is going to be every month. Okay. When is it due? End of the current month or end of the following month? That's 30 days. Create invoice automatically. Now, when do you want this recurring invoice to end? So let's say you are on a retainership for 1 year, then that means that it will end at 23/05/2021. Yeah, 22/05 will be the last invoice. Email to this email address. Copy this email address. All right. So let's say services. Service is say 200,000 or 2 million. That is at 7.5 per month. Okay, so all you need to do is click on save. So what the system does is sends at that particular period, it will automatically send the invoice on monthly basis from the first month. On that due date, 23rd of May, it sends that invoice to the client. Right, that's for recurring invoice. Now, if you come back to your transaction, you still have a host of other items there. For example, customer credit notes is something you can always use to offset your customer accounts. So in the situation you are giving credit to a particular customer, you can always use your customer credit notes. At the same time, when your receipts have not been allocated, it is always good to use allocate receipts. Yeah, and the essence of allocating receipts is to attach your payment to a particular invoice. Okay, let's look for a customer that does not have uh, that has not been attached. Okay, I have no receipts. ABC. Okay, there's a receipt here of 525, a credit note. Yeah, a credit note. We want to use this credit note to wipe out this particular invoice. So what you do is that you put your mouse right here on this credit note or the payment as the case may be, and you left click. You click on it and drag down to this one. You can realize that the moment you drag and you place it on the invoice, you can see the green mark button appearing, and you drop your mouse and click on it. Automatically it allocates, and you click on save, and it's done. So it's either you allocate your receipts at the point of creating your receipts when the payments are made, or you go to customer allocate. I want us to pay attention to the difference between customer write-off and customer adjustments. Now, there is a difference in the use of the two, and if used wrongly, could distort your financials. Now, customer write-off is only used when you are writing off uh, bad balances from your customers. What I mean by bad balances, I mean bad debts. And it's not always good to write off your bad debts. It's either your bad debts are recoverable or not. Okay? If you are now writing off your bad debts, that is when you use your customer write-off. Now, you shouldn't make a mistake of using customer write-off to do some other things on your customer's account. It will clearly distort it. And at the same time, anything you do on this write-off, customer write-off page will automatically report into your P&L as bad debts written off. So sometimes it is not bad debts written off really, but once you use it, it is bad debts written off that will appear in your P&L. All right. In this case, let's assume I want to write off this customer's balances, and I say, okay, I'm writing this off. I'm saying under description, I type in customer irrecoverable customer balance written off. Okay. Now, which of these balances do I want to write off? These are all imaginary transactions. They are all imaginary accounts. So I want to write off everything. Okay. Now, the moment I click on write off, it goes into my P&L. So I'm clicking on process. Okay. Now you can see my customer write-off. Everything here reports to my P&L. Now to prove that to you, let me go to my financial statements. My P&L. Okay. Saturday. Okay, system is processing my request. Okay, now you can see that that particular those invoices I've reported here as my revenue. At the same time, they're reporting here as bad debts, which yeah, other expenses. So I want us to please note that anytime you are using customer write-off, you're writing off to your balance, to your profit and loss account. But at the same time, you could have transactions you want to clear. You could have balances you need to clear off your customer accounts. For example, your customers or your clients, as the case may be, are deducted withholding tax. You work for government agencies, you work for oil and gas companies, they deduct VAT and withholding tax, they deduct NCD, 1% NCD levy, things like that. When their payments are made, you actually go to allocate the particular payment that has been made, which in this case will be lower than the invoice value. And as a result of that, you will always have a balance remaining in the customer's account. Now, will you continue to carry those balances in your customer's account? No, because those balances are not to be paid. So it's two ways. It's either you leave the balances in the customer's account, or and be reporting in your receivables. At the same time, on the other hand, you clear those balances to your withholding tax receivable, which is a current asset. Take note that withholding tax that is deducted is a value to you and it's an asset to you. And so you can have a withholding tax receivable ledger. You can have a withholding tax receivable ledger where you clear it to. And how do you do that? You use your customer adjustments. Now, your customer adjustments affords you the opportunity to select what ledger are you writing off. What ledger are you writing the balances off to? All right, this is what I mean. You click on you select your customers. You select your customers. Okay, I need. All right, you select your customer. Now, what is the effect of what you want to do? The effect of what you want to do is that you want to increase the affecting account. By the affecting account means that the account you want to debit. In this case, what the system is going to do is to credit your customer, which is in receivables. All right. As you are crediting receivables to reduce the value of receivables, you are debiting a withholding tax receivable ledger. Now, you say you are increasing, then you select see withholding tax. Okay, withholding tax receivables. The value, you can say withholding taxes deducted at source by clients. Okay, so once that is done, you click on process. And so with that, it takes it boom to your withholding tax receivable account. There are other things under your customers module. You have various reports. For example, you have your customer statement run, your list of customers, sales by customers, sales by sales reps. Yeah, sales by sales reps, customer sales order, customer codes, customer statements, customer communication report. Before it used to be referred to as email reports to customers. It's now called customer communication reports. Then you have a report for customer invoices. You have a report for customer unallocated receipts. All right. Now, furthermore, you also have a special module here for adjusting opening balances. In a situation where you are into time tracking, that helps. Then your data manager, which is something that has just been introduced. Now let's pick data manager one at a time. So you have your data manager module. I want to allocate it so that I can use it. So you have your data manager, you have your invoice, you have your invoice manager, invoices manager, your outstanding invoice communication run, customer non-payment reasons, outstanding invoices, action code. Now these are all you need to know about the customer model. Thank you for paying attention at this time. Have a nice evening.